Hey everybody, today's Tuesday night, the 11th. We're taking a look at the S&P 500, getting ready for Wednesday, June 12th. We have the CPI report in the morning before the open. That'll come out at 8:30. Probably going to get some volatility surrounding that, and I think probably started on that volatility today. Here is our daily candle from today, and this is almost almost a true bearish engulfing candle. Although we did not close below yesterday's low, that would have truly made it an engulfing, but we did close below yesterday's close. So it's pretty close enough. This is definitely not a bullish candle. The only thing that would make this bullish is that if it was just a trick to draw in people short and whip them around in the pre-market tomorrow on a reaction to the CPI, and then we wind up rallying. If we are going to rally one more time, we made our highest high of the month and of this run so far today. We made a look at this ridiculous gap that we had open. This was completely uncalled for, and it had setup written all over it. I mean, we closed down here at 28.85 and then we gap up open at 29.03. Are you kidding me? Come on, almost a 20-point gap up open. We make our higher high, and it was within the first 10 minutes, it was like boom, the sellers just hit it as hard as they could. We keep running into this 29.13 level up above. This is a gap that runs from the May 7th open to the May 6th close. This was a Monday, Tuesday gap down open kind of thing. And get into this gap, we're just going to be going for a new all-time high. I think once we get into this gap, that this 29.13 will then become support, and they're going to really trap shorts below this level here. So I think until they're damn good and ready to get up in there and do that, they're trying to get some business finished, and they're trying to get at least this CPI data out of the way. And if this CPI data, it does not say something in it that makes the market want to continue the rally, then we're probably going to be on hold, and we're going to back test some more until we get through the rest of this week and we get to the Fed meeting next week. We have the ES contract roll on Thursday night, so there's always going to be some crazy swings going on with that, and so it would make a lot of sense to just continue down a little further here from where we're at. And if we are going to continue lower, this roadmap chart will give you in great detail everything that we could possibly hit and pass or hold at. And this is good if you're quickly trading ES and you want some backup information aside from your analysis on ES. This is good for spread traders on the S&P, or just good for people that really want to have this information and understand what comes next. So here we have, this gap to Friday's close, and our 50-day simple moving average is moving up on in here as well. This would be our most mild pullback if we were to hold here and chop around for a couple of days and then try to take that run at 29.13. I don't think that's going to be enough. I think they'll break the 50-day, and when they break the 50-day, that's going to set off a ton of stops, and we're going to at least go down to test Friday's low, where we have another gap that leads us back to Wednesday's close. So gap fill to Friday's close, and if that doesn't work, then back test Friday's low and test this next gap to Thursday's close. Our 20-day simple moving average is hooking over and coming up on us quickly here, and it's going to be, maybe not tomorrow, but the next day it's going to be tucked up right in there, right at this gap fill. So if we just get down about here tomorrow, then I would think we would follow through the next day when the algos know that the 20-day simple moving average is going to be there, and then maybe we push all the way to there. If the market wants a little bit deeper of a correction, maybe to the 50% retracement of this whole rally that we've just done from the first trading day of June to our current high at 29.10, our halfway back point now is at 28.1971. This rhymes with this incredibly major edge point that we brought into this year with us. This was the level where all of the rallies crashed and burned in Q4 of 2018, and then in 2019, the whole first quarter was like, trying to climb that hill and get to this level, and it took until the opening of Q2 to really push us up and over and hold above this level. Anyway, our 10 and our 100-day simple moving average are sitting right here as well. So there's a lot of stuff all gathered here at this halfway back point. Now, really, if the market gets wind of something, or maybe as we get to the Fed next week, and if the Fed says something that spooks the market, maybe at that point we would break even lower than this halfway back point and come on all the way down here, test our 200-day simple moving average, and maybe fill this last gap down here all the way back to the first trading day of June. And I can certainly see something like that happening if the Fed plays hard ass with us and does not talk about any possibilities of rate cuts whatsoever in the statement or in the press conference. The market is going to take no prisoners on that. Okay, anyway, here is the simplified daily chart. This one's probably more useful to people that are just trading directionals and are either making very $5, which I never buy unless I'm making a spread. But if you do, that's your thing, and just apply the same rules that I talk about. Wait, buy those in the $2 to $3 window and wait for them to get to 5. And if they get to 5, wait for them to go to 8. And if they get to 8, wait for them to go to 11. It's all the same thing. Your exit point. Anyway, that's good for you, or people that are just strictly directionals, no matter what their entry is, and they really just want to know the main points that they're shooting for. And overhead, this really shows you very simply here. Overhead is our big gap here from 29.13 to 32, and then onwards and upwards to a new all-time high from there. Down below, a little tiny gap fill here to the 50-day. Then boom, you have a big drop, which is basically the body of the Friday candle, on down to the Friday low, and then maybe fill that next gap. 20-day simple moving average hooking up and coming up here. You also have your halfway back for the whole quarter. So that's our low that we made in June all the way back to our current all-time high. And then if that all breaks, then back down here to the halfway back for June, the 10 and the 100-day simple moving average. And if that all goes, then we are down in the lower half of the trading range for this run, for this month, the original point that we started from back on the 3rd. We have a little trend line here too. I won't bore you with the details of where this comes off of, but it comes off of somewhere back here in January. If we ever get down closer to here, I'll discuss where it comes from, but I'm just pointing it out because it's here on this chart. But here's a little trend line that we could maybe look to, that maybe might be a point where we could come all the way down here, fill this gap, and maybe look below that gap, make a higher low against this, and maybe it'll involve tagging this trend line and bouncing off of that. So anyway, but like I said, I think that they'll hold things above, at least hold things above the halfway back point for June until we get to the Fed next week, and then they will save the other shoe to drop. They'll save that for if the Fed doesn't say the things that the market wants to hear. If the Fed does say the things the market wants to hear, and we haven't gotten to 29.13 yet, then I think that's going to be it. That's going to be the catalyst that'll take us over 29.13. And that'll take us on up through this gap and on up towards a new all-time high, starting with that still unresolved ES level at 29.61.25 that printed in the pre-market on the same. Still have that unresolved level to go after, and that would be the first target above for a nominal new all-time high. Okay, have a great rest of your evening. I hope this video got you all informed and ready to face Wednesday and that CPI report in the morning before the open. Have a great rest of your evening. See you tomorrow.